Welcome to the August 11th, 2025 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. We learned a lot this week, and I'm going to cover what's ahead for the rest of 2025. And I'm going to give you some previews, but I'm also going to give you some problems with the current market and what to do about it. This is a 5-day chart on the Dow. What happened right here? On Thursday morning, we were up nicely. A couple of hundred Dow points, 44,500. Whoa! Well, Trump had announced, and the Dow was up in pre-market trading, but then Trump announced that all the tariffs were going to take effect at midnight. And in addition, 100% potential tariffs on chips and double tariffs for India and Brazil. Now, what is the market realizing here? If you go back to April, the Dow had gone from 45,000 to 37,000 as all the tariffs were announced. What the market appears to have realized is that the tariffs are a negotiating tool for both foreign policy and investment in the United States. The tech rally is driving this market, by the way. This is the NASDAQ, and it finished the week just a tiny smidgen from the all-time high that it set in July. What's happening here? I'm going to take you into the components there. It's called a thin market, and we may be stuck in irons for a while, and I'll explain why, because of the overvaluation. The other things that are coming up is the Federal Reserve meeting in September, November, and December. They've got their meeting schedule set. So the key events, well, they're likely to start to cut rates, and we'll cover that as well because they've got a new Fed member being appointed by Trump, and obviously he's going to be, or she's going to be, in the Trump perspective. The reason that the AI mania has powered the QQQs to a new high in the face of the tariffs is the realization that those tariffs may not take effect. This was a good week for Apple. Why? Apple announced a $600 billion investment in U.S. facilities, including Austin, Texas, and Fort Worth, Texas. Austin happens to be their second campus. What's great for Texas, everybody wants to have a headquarters here. If they can't move the whole company, they start to open a regional office. Goldman Sachs did it, Fidelity did it long ago, and you have the New York Stock Exchange and the NASDAQ coming to Dallas to compete with the Texas Stock Exchange because they didn't want to lose that. But back to tech. The investment in U.S. manufacturing is good news, but it also means they're likely to get an exemption from 100% tariffs on incoming chips. It's all about tech in the current market. It's a thin market, and we may be stuck in irons for a while once these growth rates start to come down. Palantir had an amazing growth rate. These are the top performers the last 90 days. Now, the S&P 500 up, the S&P 500 overall up for the year. The NASDAQ's up 12%. Advanced Micro up 72%. Western Digital 69%. Oracle 65%. GE Vernova makes the power equipment, and that'll help power the data warehouses, right? Then we go to Arista Networks, bouncing to near an all-time new high this week. Palantir 56%. Just in the past 90 days, this is, since the April meltdown. Palantir is up over 120% so far this year. Software innovation, leading the AI charge and getting lots of government contracts. There's Seagate Technologies and NVIDIA. The bottom of the barrel, well, United Healthcare, the fraud investigation, Texas Pacific Land, 32% down. That may have something to do with the wind and solar cutbacks using up less of the Texas land, and of course oil at 64. That's the other factor there. So the tech companies leading the charge. Is the current multiple justified? We're at 11.4% on the S&P 500, more than last year, now that most of the companies have reported for the second quarter. That's important. That says, yes, earnings are growing, but they're not growing as fast as the appreciation in the market. We are now, according to this chart, 27 times earnings. And that, look how historically high this is. This goes back to 1995. Wow. And of course, when you get this overvalued, that tends to lead to a crash. Now, 2020 was different because this earnings multiple spiked because earnings went down because everything got shut down for a while, and we're back to 27. To get to 18 times earnings, what would you need? And 18 is more normal right in here. There are still good bargains in the market even currently. However, you may go sideways for a while. That's the key information here. What about the economy? Important week. This is when the Atlanta Fed releases their growth estimate for the current quarter. That would be the third quarter. 2.5% economic growth. 20-year average, 2.1%. What that tells you, the economy here in the third quarter, now that we finished the month of August, is actually healthy. And that says if you do get corrections, it's going to likely be softened by the Federal Reserve cutting interest rates. Now that Jerome Powell has been insulted by Trump as Mr. Too Late, a fool, a total loser, and other things, along with chastising him about the $3 billion renovation, well, the rest of the Federal Reserve, the suits kind of moved together, and they're all realizing, hey, Jerome's gone in May, and his replacement is going to be here shortly, even if he doesn't take office. So that could be 3 rate cuts for the rest of the year. According to the Volcker thesis, how many rate cuts would you get in 2026? Another 3 or 4 on top of that. And that also helps to say that multiple, the S&P earnings multiple, can come down because interest costs would go down. All right, the year-to-date return on the Dow is 5%. It is lagging somewhat the mighty NASDAQ because of those tech stocks. If those growth rates start to slow in the tech stocks, the indexes are sideways to down for an extended period. But we've already got our bargains picked out, and in the fixed income sector, we're still finding attractive yields above 7% in the high yield area. We're including that in the portfolios. I'm Spencer McGowan, your financial weatherman, president, McGowanGroup Wealth Management. You can set your time to meet the team that cares and upgrade your plan. We serve affluent families from right here in the Crescent in Dallas. Come get an office tour at networthradio.com. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You could see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.